where is the market heading? The most popular question I get is, what's going on with the market? How is the market, Tom? What's taking place? So let's kind of dive into that. This is our most popular chart that we always put up for every one of our webinars. This chart here represents the average home for a price average price for a home on the Toronto Real Estate Board. Let me slow down a little bit there. You'll see here that it starts in 2017. So 4 years ago, we had this surge in prices, basically 20–30% in a matter of few months. And sure enough, the government stepped in April of that year, so over 4 years ago, announced something called the Fair Housing Plan, which included provisions such as the foreign buyers tax. Once that was announced, it actually worked, because guess what? The prices went down just as fast as they went up. And then you'll see for a few years, the market's behaving fairly steadily. And then you have this big green circle to the right that represents COVID-19 era of real estate. And you'll see the first dip here. This represents actually the first lockdown in March of 2020, where we saw about 50% of our buyers leave the market due to the uncertainty of what was happening. Again, it was short-lived. Once the economy started to open up and people felt more comfortable with what was taking place, the buyers came back. And you can see that there, rebound in the price. Then you'll see the second surge happening here. This is actually just coming off of December and January. So it's as if like January 1st, everyone made the same New Year's resolution and said, hey, I want to buy property in the new year. And you can see that just take off. And for the last number of months, you can kind of see it plateauing, right? And that's just because the market cannot continue jumping $50,000 to $100,000 per month. It's just not normal. So we're seeing some kind of leveling off in the marketplace. Diving a little deeper here, these are stats from the Toronto Real Estate Board. And what this chart here kind of compares is August of 2021 versus August 2020. And I'm going to point out some key stats for you here. So first is a number of sales. So that represents the volume of transactions, the number of buyers out there that are transacting in the marketplace. And you'll see that that decreased about 20%. So less buyers basically. However, you'd think that that would have some effect, but here's the thing. When you have 50% less listings, or your supply is down by 50%, well, that kind of offsets it. And that's why we've seen the increase in price of about 12% on average, with the average home in the GTA costing almost about 1.1 million. It's just incredible when you think about it. Well, going back to supply, it's still one of the trends we're seeing today is that it remains low. And you'll see here what this chart shows is comparing the July volume. So in July of 2021, you'll see that we had essentially a supply of about 9,700 homes. Our 10-year average, take a look at this, is just shy of 17,000 homes on the market. So we simply are not, we don't have enough product to sell basically. Also our prices. So this is something that I've been sharing with people, is understanding, the average difference in price between the average freehold and condo. The average freehold, believe it or not, is about $1.4 million. I should say the average detached freehold, 1.4 million. Meanwhile, our average condo is about 670,000. So you can see that discrepancy just getting wider and wider. Interesting enough, I get this question, bidding wars, are they still happening? They are happening, but we find it's hit and miss. So just to give you an example, these transactions happened last month. These are sellers of ours. We had this one Mississauga detached home, semi-detached home that was listed for $849,900. We had 20 offers, and we'll play a little game here. If anyone can guess the correct price, you don't get any prize, but you'll get bragging rights. So Price is Right rules. Whoever's closest without going over. Take a guess here what this home sold for last month.
Yeah, feel free to put your answers in the chat.
We've got 979, 1.3 million. Anybody else want to take a guess at this? 1,025,000. 1,025,000. 25,000, I take it. 1.2. Okay, Eric, what was, you want to announce that price? You sold this one. What did it sell for?
Oh, Tom, you should have warned me for this. we It's not even sounding facetious. We sell too many homes. Honestly, at the end of the day, we just sell too many.
I put him on the spot. So it's the correct answer, 1,170,000.
Yeah. It was
So
a very, very good price, and the clients were extremely happy. In that case, the attempt of doing the holding back on offers really worked well to the benefit.
then we have to the right here, the Mississauga townhouse here. It was just, this happened 2 weeks ago. It was asking 689,000. Guess what? We only had one offer on this property. If anyone wants to guess what it sold for. So if you want to put your guesses there, guys.
At 1.2, 679,
715.
675, 789.
Someone's really competing against themselves.
No, nobody's guessed $1 yet, so I guess we're not doing Prices Right rules.
So the answer, again, only one offer, not competing against anybody, sold for 700,000 even, firm. So interesting enough that even people are willing to pay more than the asking, even though there's only one offer on the table, okay? However, you know what, we'll also point out that some properties are taking time to sell, okay? So this is the confusion in the market, is that people are talking to their friends and neighbors and they're getting different stories. And really our market is really fragmented depending on the type of property, where it's located, and a whole host of other factors. So really you can't paint the market with a broad brush. For example, we do have some properties here taking a little time to sell. We have this one Mississauga townhouse that's at 749. It's close to 60 days on the market, 2 months. It looks, as you can see, it looks gorgeous in the photo. Sure enough, I actually just got an offer on this half an hour ago, so we'll see if it does end up selling tonight. Then we have this another one, Rexdale townhouse, fully renovated home, asking 784,900. It's over 75 days on the market, and you can tell, because you can see in the photos, looks gorgeous. But the point I'm trying to make is that we do have what we call a fragmented market. It does depend upon area, type of property. Some are selling with 20 offers, some are selling with no offers. So it really is kind of mixed up there. But to bring it all together, the second most common question is, where do I see things going? In the short run, it's anyone's guess whether the market will go up, down, sideways, etc. However, my answer, I say, is I firmly believe that in the next 5 years, whatever you buy today will be worth more in 5 years from now, guaranteed. Okay, well, I shouldn't say guaranteed, but very likely. There's no guarantees in life. And here's the reasons why. Our demand continues to rise. We're expecting to have over 400,000 immigrants come to this country every year, with the majority of them coming to the GTA, and they need a place to live. Okay, and it didn't matter if the Liberals won the election yesterday or not. This was going to happen regardless. Canada is bringing in immigrants, bringing in a lot of these people, because they're going to be taxpayers at some point too. Now the supply. To be quite honest, the government has tried to put some sort of stimulus to increase the supply. And as you saw from that chart previously, we are really low in supply. But I have not seen any sort of proven plan to increase the supply in the marketplace. So guess what? Demand high, supply low. We're also seeing that material costs are going up. So I'm sure you've noticed that if you go to Home Depot, or if you try to buy any sort of construction sort of equipment, prices have gone up. Guess what? Builders have a certain margin that when they sell a property, they're going to need to make a certain amount of money. So prices are just basically, they pass that on to the buyer. The other thing too to note is this aspect called monetary policy. So the government continues to print money out there, and the more money put out there causes asset prices to go up. And I think recently an article they put that inflation was hitting just over 4%. So we are seeing that with that in mind, that you're going to see asset prices, or in this case homes, continually go up at some sort of pace. So again, just to sum everything up, in the short run, we don't know where things can go, just because you may have another lockdown that may affect the market. However, you got to look at the long run, is that the market, we do expect the market to continue to rise.